Hi, this is Ramesh, Practical Accounting Trainer. Today's topic is debit and credit rules in accounting. In our previous video, we learned types of accounts. There are three types in accounts: personal accounts, real accounts, nominal accounts. In the entire universe, all accounts are classified into only these three types. One is personal account, another one is real account, and third one is nominal account. Now we are going to learn debit and credit rules. What account should be debited and what account should be credited? This is the concept today we are going to learn. The debit credit rules are applicable depending upon the type of accounts. If there is a personal account, debit credit rule is different, and for real accounts, that rule is different. Without knowing this debit credit rules, no accountant can work. This is very crucial to the accountant. That is why these rules are called these debit credit rules are called golden rules of accounting. Friends, as accountant, you know very well that we are using double entry system. Double entry system. For every debit, there is an opposite equivalent credit. So, once you decide what is the type of account, then the next step is that account should be debited or credited. That is the second step. That is why this debit and credit rules are so much important. See, what are those rules? If it is a personal account, the debit credit rule is debit the receiver. Debit the receiver. Debit the receiver and credit the giver. Credit the giver. You know what is personal account? All human beings, natural persons and artificial juridical persons. All persons. Suppose one person is there, he is receiving something. That receiver account is debited. One person is there, he is giving something. So if he is a giver, his account is credited. See, for example, Mr. Rama is paid rupees 10,000. Mr. Rama is paid rupees 10,000. Rama how much paid? 10,000. Who? Rama. Here, if you see paid means that is nothing but cash. If it is paid in check, here it is mentioned compulsory that the check number and so and so bank. So if simply paid means cash only. So Rama is paid rupees 10,000 in cash. Here, what are the accounts here? Mr. Rama is one account. Cash is second account. So, first step is, as accountant, you must know Rama is what accounting type. Rama is a natural person. Rama is a natural person, human being. Rama is a natural person, human being. So this is sure. This is personal account. This is personal account. So for personal account, what is the debit credit rule? Debit is the receiver, credit is the giver. Here, what is the position of Rama? What is he doing here? Is he giving or receiving? Rama is paid. It means he is giving 10,000 cash to the company. So he is the giver. So Rama is credited. Rama account is credited. Next, cash. Cash is what is the type of this account? Cash is not a person. It is not expenses. It is not revenue. It is not gain. It is not profit. So cash is a physical form, physical asset. So this is cash. It is nothing but physical cash, physical form. It is in physical form. So it is a real account. It is a real account. It is a real account. Let us see here itself what are the golden rules for real accounts also. For real accounts, debit what comes in. What comes in. What is coming into the business? What is coming into the business is debited. Credit what goes out. Credit what goes out. If something is going out of the company, that is credited. What is the golden rule of debited and credit rule for real account? Debit what comes in, credit what goes out. So here see friends, cash is a physical thing, that is a real account, we decided already. Here cash is coming into the business or going out into the business. Here Ram is giving and paying something, cash is coming into the business. So this is nothing but debit. Debit rule is applicable. What comes in? Debit. So here the debit cash account is debited and Rama account is credited. Clear? So what about the nominal accounts? Let us see. What is the golden rule of accounting for nominal accounts? Debit all expenses. All expenses. Debit all expenses. All losses. If there is expenses, debited. If it is loss, debit. Credit all profits. Credit all profits and all gains. Credit all gains. Suppose, let us see one example. A paid by the company, rent paid by the company to the landlord, rent paid by the company to the landlord rupees 10,000, rupees 10,000. Here see, first we have to know, we have to find out what are the accounts. Rent paid. Rent paid is, this is expenses. Rent paid account is, rent paid is expenses. This is one account. And another one is what is the transaction? Paid 10,000. It means we are paying in cash only. We are paying in cash only. Another one is cash. This is physical form. This we know that real account. Real account. So here rent paid is expenses. All expenses are debited. So the rent paid account is debit. And the cash account, what? The cash is coming inside as per real account rules. It is coming inside or going outside. Rent paid means cash is going outside. So that is, real account, that is credit. Cash is credited. Cash account is credited. Rent paid account is debited. See, these are golden rules of accounting. It's a simple, friend. Without knowing these credit and debit rules, nobody can do accounting. It's a very, very, very important first stage of accounting is recording, as per the definition. Recording means first step of bookkeeping, first entry level. So if you have done perfectly in the entry level, all the remaining steps will be well. So please be confident in this subject. I believe that you got a very good idea. And in the next video, we discuss the next chapter, next steps in accounting. Until then, bye.